Okay, good morning, everybody. Today is Thursday, March 2nd, and we got bonds and the dollar going nuts. VIX is up 2% today, too, so fundamentals are not looking pretty. 10-year is currently at 40.7, so we broke that 4 mark, and we are just jacking the rates up today. We ended up closing at 39.95, currently at 40.75 for the 10-year Treasury rate. If we're looking at the dollar, this one is surprisingly higher after yesterday's lows. We're actually at a 2-day high. If we look back on the 20-day chart, we're almost at a new high here too. So pretty wild pre-market to say the least. We got SPY currently trading at $392.60. I did open a put credit spread that I'll probably have to exit just because how bad things are looking this morning. I think that the strike prices that I chose might be tested. I did go a little bit lower with my strike prices than I usually would. Got a less credit for it accordingly, but if we head on over to the Robinhood, should make up for that with the Tesla trade that I took on yesterday. Before their big investor day, where typically they do a bunch of science talk that investors don't understand, and therefore their stocks hold off 8%, which always happens at basically every single event that they do. They should probably hire someone to communicate the science a little bit easier so like us smooth brain people can understand, but they got the situation that they do. Good morning, Nice Fishman. Good morning, Irfan. Good morning, Lone. Welcome. We're about to start the market in 15 seconds, and we'll see where we head from here. Right now, we're at 47 RSI. Good morning, F. So basically neutral right at the start of the market. Good morning, Gary. How do I see the markets going today? I'm feeling pretty bearish just based on the fundamentals, but we did already sell off a good bit, so either bearish or neutral would be my guess. Currently, we're down 0.5%. I could see us selling off maybe another 0.25%, so another dollar or so, based on a $400 SPY. So we might be headed down to like 391.50 or 391 would be my guess. I do have some support levels for SPY right around that range, I believe. Ooh, TLT is breaking a new low, currently trading at 99.30. That is no bueno for the bond market, which to be expected with a 10-year trading at 40.8, a new high. Bonds are definitely going to feel the pain. At least the prices are. But bonds are starting to have a pretty attractive yield. If you're putting your money into a 1-year treasury bond, you're getting like 5% on it. So if you want a risk-free investment, then 1-year bond is actually pretty competitive compared to, the market maybe returning you who knows how much it's going to be. Probably, I would say around the same, if anything. And if you compare that to like dividend stocks that are paying like 3%, 6%, you're not carrying the risk of holding the equity in the stock. So definitely a good position to be in the fixed income market with the bonds. But Tesla call credit spread basically at max profit at this point. These are going for 17 cents. I might as well just take my profits and leave this trade. Doubtful that Tesla would be able to make its way back up to 205. But, anything is possible with this stock, right? So let me try to close out at the bid and ask keeps moving around on me. I'll try to close out at 20. So that for me is about $160 profit if that order goes through. Yep. Let me post that to the premium Discord. Let me move this over a little bit so we can see where SPY is trading on the right. And post this alert. How am I seeing Tesla today? I think that it's going to be down. Pretty obviously, just because they're investor day. Like, the thing about their events is that they're really great for people that understand this shit. But for people that don't understand the science behind all the stuff that they're trying to do, it just goes over everybody's head. So That's why you're seeing Tesla down by 8% today. But just took profits on that. Closing options alert. Premium. Just took profits on the 205, 210 Tesla call credit spread that expires tomorrow, 2-3, and I got out at 20. Originally, I picked those up for, I think, 180 a piece. I got it when I was trading at like 202 or something like that. So, nice little profit there. Originally opened at 180, so 160 profit. Not too shabby. Not too shabby at all. And then let's see what we can do with SPY today. Currently down 50 on this position. I do have an IWM bearish position, and it finally broke the range that I was expecting it to go below. Might as well take profits on this too while I'm at it. I opened 5 of these at 32. Now they're going for 11 cents, 10 cents at the ask price. I'll try to get out at 10. If I can't, then I'll have to do 11. It's $5. I'm not going to be too worried about $5 when I've already made 110. And then we'll focus on that SPY trade after we can get out of this. Looks like SPY is trying to come back to 393. It's at 50 RSI, so it's kind of undecided at the moment on whether it wants to go up or down. I'm going to have to replace this to the ask price at 11 cents. If Robinhood will let me. Now it's moving to 12. God dang it. I hate how slow Robinhood can be. Alright. I'll do 11 cents. Maybe have to move to 12. I would rather not. But with Robinhood, there's no telling. No telling with their bid-ask spreads and how wide they are. It's gone for 9 cents, and I'm putting my order in for 11, so it should be filled at this point, but that's Robinhood for you. All right, SPY's currently trading at 392.91 at 50.7 RSI. If we're looking at the VIX is currently moving down from 21 this morning. TNX, or the 10-year, is down from 40.7. And then the Dixie, the dollar index, is just about flat. All right, we got out of that position for IWM, call credit spreads, for a good profit there. Closing options alerts. Premium. Just took profits on the IWM. This was a call credit spread expiring tomorrow, 2-3, at 0.11 each. And the strike prices I chose, 190, 191. Actually got out at 10 each. Lucky me. And originally picked those up for, let's see, IWM, if I can find it. Originally picked those up at 32. Originally opened 5 at 32. So 160 minus 50 is $110 profit. Why does the media try to build on all the hype around Tesla? They're influencing the price. What's really weird about Tesla and their investor day yesterday is that it was supposed to be like the, what is it called? The master plan part 3, but like it wasn't structured like a regular master plan part 3 would be. Usually it's in written form. When we got part do, or do, whatever you call it in French, I don't speak French, but part 2 in English. And then part 1, like, it was in written form, and then this one was supposed to be like in visual form. It was just very weird that they did it the way that they did. I wish they would just stick with their regular and just leave this to being investor day. But let's see. This is my morning analysis. Non-farm productivity came in worse than expectations at 1.7 versus 2.6 expected, up from 1.4% prior. Could signal weaker GDP to come, which gives me recession vibes. In the meantime, unit labor costs climbed 3.2% quarter over quarter compared to 1.6% expected, so way higher than expectations, twice as high as expectations, and up from 2% the previous quarter. This is what you know as stagflation, where you're seeing rising prices due to people getting paid more, and you're seeing inflation continuing throughout the economy while the economy is slowing down at the same time. So people are going to have less discretionary spending, less corporate earnings accordingly. So earnings is not going to look pretty for 2023, which is part of the reason as to why you're seeing stocks falling, but not the whole picture. The whole picture would be rising interest rates, rising dollar, and then that stagflation on top of it is just the icing on the cake for the bears. Honestly, I feel like Elon didn't have the kind of energy that he needed for to really hype the stock up. Like if you watched him, he just didn't really seem too into it. Like he seemed like he was bored, or I don't know. Like him and I think it was Zach Kirkhorn. Whenever they came on stage, they weren't too excited to be there. It seemed like to me. It was very strange. Very strange event, but anyway, SPY is coming down, so these put credit spreads are starting to eat away at my profits a little bit. They're down by $50. I think I'll just take the loss. I opened them at 24. They're going for 38. I could maybe hold them and get a little bit extra profit out of it, but in my opinion, I mean, I've made so much profit this morning, it doesn't really matter to me. I'll try to get out at 36, at least get a little bit of a deal here, but we'll see. Yeah, there we go. We got out at 36. I opened these at 24, so 12 times 4, $48 loss. That is not a screenshot. All right. Closing options alerts. Premium. Just cut losses on the SPY put credit spread expiring today to 3-2. It is March at 30. What? 144 over 4. 36, I think. Yeah. Strike prices I had chose were 391, 392. And I originally picked those up at 24 credit, so did take a loss on it, but put credit, try to find that one. Open at 24, 4 at 24. So that was a smaller position than my other ones. Originally opened 4 at 24. So 36 minus 24, 12. $48 loss. The way I see it is the dollar cost average Tesla stock, whoever's interested. There's nothing wrong with Tesla fundamentals. Yeah, I agree with you. I have been dollar cost averaging, but I did not want a dollar cost average when it was trading above 200. I was buying my other dollar cost average stock instead, Fulgen Genetics. So instead of buying $100 of Tesla, $100 of Fulgen, I was just buying $200 of $200 of Fulgen a week, which turned out to not be the best idea, considering that they're falling even more after their latest earnings report. But I do see some opportunity in this stock. Nonetheless, over the next 10 years, this is a very long-term investment. So we got Costco reporting earnings today. They're currently trading at 478 and some change, high change, 478.64. They are trading in the lower end of the range, and this is a recession-friendly, not recession-friendly, inflation-friendly stock where food prices are going up, which ends up boosting their bottom line, their earnings per share. So Costco could have a good earnings. Let me go to my Notion page, pull up the notes that I've got for it. And what is the most likely scenario? All right. So if we're looking at Costco, this is my estimates. So if they do better on earnings per share at 321 earnings per share, and they beat revenue, the stock would go above 500. That's a little bit out of reach now, I would say. Maybe 490 would be a better estimate there. If they beat earnings, miss revenue, they would be above 485. That I could probably see happening. If they miss on the earnings, below 321 earnings per share, and they beat revenue, they could be staying above 481. Maybe. That's possible. And then if they miss earnings, miss revenue, they're going to go below 473. I think the most likely outcome here is probably this trade. Miss on earnings, beat on revenue. So if we're assuming that it's going to be above 481, that would be a call debit spread. I probably wouldn't spend a lot on it. Whenever you're doing debit spreads, I usually reduce my risk to like 50 to 75% of what I would put on a credit spread. That's just my take, though. But looking at Costco, assuming that it's going to stay above, or assuming that it's going to go above 481, they only have 250 strike prices, so we can't do that. But if we do a 477.5, 480 call debit spread that expires this Friday, we're paying 165 to make 90. Okay, that's the bid-ask spread for you. Meh, that sucks. Okay, let's go to Trade Aries. See what they'll quote us for. Costco. It's already trading above 480 right now. But let's go to their options chain. Set our expiration date for this week, I guess. Buy, sell. Place the order. And this is going for 125 at the bid, 130 at the ask. So I'd probably just buy one of these. At 130, and that's all I would spend on it. I wouldn't overspend on a debit spread again, just because the likelihood of it working out is a little bit less. But let's see if I can get this for 130. I'm a little bit doubtful that I can actually get it at 130, but might as well try. Nope. 130 did not work. We'll try 135. And get ripped off a little bit. There we go. Yeah, we got filled at 135. So my assumption, Costco will be above 180 after their earnings report, which is today after hours. And I only spent $130 on it, so not much to lose if I'm wrong. New options alerts. This is a swing trade. Premium members just opened a new Costco call debit spread expiring tomorrow 2/3/32. 3/3. Jesus Christ, I keep thinking we're in February. And I got it at 135. Okay. Strike prices, assuming that it's going to stay or go above 480. All right. Sweet. So we got that trade down. Let's check out SPY. Currently still in that range that it was this morning. So between 392.50 and 393. So these put credit spreads kind of just wavering. Let's check the SPY put debit spreads that I had opened, assuming that it will be below 391. These are currently going for 42 cents each. I feel like they should be going for a little bit more. Given how much time they have until expiration, I feel like they would go for like 45. But we're not getting that out of it right now. So either we can wait for it to keep on coming down, or we can take the profits now. If we look at the 10-year, basically still flat from where it was this morning at 40.6, not really moving much. If we get a break of that range, we might head back down to yesterday's highs at like 4.05. If we're looking at the VIX, this is currently at 21. It's just been in that range of like 20 to 21 for the longest time, which is killing any VIX or leveraged VIX positions. The dollar is still headed higher, currently at 105.032, above 50 on the RSI. So if this continues to hold that 50 RSI, this would still be bullish. Oil is up shockingly too, 0.25%. And then the Dow is managing to stay positive somehow, 0.15%. So we're seeing a lot of pain in IWM, the Russell 2000, small caps especially. QQQ down pretty significantly, down 0.6%. And then SPY down 0.5% almost. And then Dow is actually positive. So this is what you would expect whenever interest rates are going up. Usually the Dow will outperform, QQQ will do worse, and then IWM or the Russell 2000 small cap companies will do the absolute worst whenever interest rates are going up. So that's why I ended up taking that bearish position for IWM. I was expecting continued rise in the 10-year treasury, and that's exactly what we got this morning. Lucky for me. SPY's back above 393. Might want to take profits for the 392, 391 put debit spread. It's going for 40 at the bid, 43 at the ask. I bought 5 at 35. So like $25 a profit. Don't want to get overly greedy. If the dollar index comes down and the 10-year comes down, that would trigger stocks to make their way back up. This does happen until next week's expiration date too. And I do still have leverage to the downside as well with this 396, 395 put debit spread. Expiring on March 24th. These are going for 48 and 53 at the bid and the ask. I might actually be willing to take some profits at this. I'm not sure if I want to take profits for this one or if I want to take profits for the 392, 391. I still want to hold a bearish position. It's just hard to say which one would be the better hold. Let's see. Let's check the economic calendar. I know that we have the inflation report coming out, I think, not next week, but the week after. If you're so profitable, why does it look like I live in my attic? Too funny you are, MC. It's because I spend like a poor man and make money like a rich man. Still drive a Hyundai Sonata instead of a Lamborghini, so that's just the way I live. Below my means. Let's see. Retta had a crazy day today. Oh yeah, that biotech company that I did not trade. I did not want to put my hands on a biotech with a 50-50 chance of winning or losing. Let's see what we got today, though. Do we got any Fed members? We have Kashkari speaking again at 6 p.m. today. Interesting enough. Tomorrow, we got Global Composite PMI, Services PMI. That's the big report that we need to look out for. Services PMI. Okay, so it's expected to come in at 50.5. Last reading was 46.8. And if we look at the ISM Services PMI from last week, this came in a lot hotter than expectations. So I would assume that this Services PMI is just going to come in as worse. And let's see what it was last Friday. I think this came out. We can double check the dates though. Services PMI, where are you? Services. All right, 9:45 on Tuesday. So this came in at 50.5. 47.2 is what was expected. So this is probably going to be about the same in my best guess. All the services, actually the services outlook in Texas was looking worse. Negative 9.3 versus negative 15. It's interesting. Services revenue, though, was up 6.6 versus 4.9 the month prior. Richmond, I'm guessing that's Richmond, Virginia. I'm not sure. But yeah, assuming that services will come in hotter than expectations, that leads to more inflation fears, which leads to SPY coming down. What are my SPY levels? Currently 395.25 for a top today. 389.75 for a bottom would be my guess. We might be able to recover back to 395, but I would say fat chance given that the 10 years still at 40.6. So call credit spread might not be a bad trade to take on, assuming that we're going to stay below like 496. I don't think we're going to manage our way back up into the middle of yesterday's range. But also watch the dollar. If the dollar goes lower, that will trigger stocks to go up. There's about a negative 0.7 correlation. So the negative correlation means that stocks will do the opposite to what the dollar does. Let's see, SPY, if we're looking at a 396 call credit spread expiring for today, that's going to pay us a whopping 14 cents in credit. It's meh. It's an okay credit to assume that we'll be below 396 and then max loss above 397. That's two prices above where we're trading right now. I just wouldn't want to, I don't know, let's see. If I do 5 of these, I risk 400 to make 60. It's not my favorite trade in terms of risk reward. But as long as we keep an eye on the Dixie, the dollar index, SPY, getting rejected at that 200 moving average, we might be able to make this work. It is only another $60 though, so I'm not sure if that's really worthwhile. Dollar index is coming down though, below 50 RSI, so I'm gonna avoid this trade. Too little credit for what it's worth. I'll try to lower the strike price down to 395. See what we can get out of that one. So if we go with 395, we get paid 22 cents in credit versus 13 cents. But you know, with the dollar index, I would hesitate a little bit on this to open it right away. I would wait until we get a confirmation higher with the Dixie above 50 again for the RSI. And then for SPY, clean rejection off of that 200 moving average. It does look like a pretty clean rejection so far. Yeah, might have used that opportunity to make a little bit of change, but that's okay. Bulls are trying to break the daily 200 moving average. Yeah, they tried to. Got pretty close to it, but they actually went a little bit above it, and then everybody sold off as soon as it went there. But yeah, with the 10-year up today at 4.6, or 4.06, I should say. If it was at 4.6, then we would have real trouble. Dollar is making its way back up slightly at 50.1 on the RSI, so might get a clean pullback here for SPY. And now the 396, 397 is paying about 12 cents in credit. That's what I was looking at earlier. I think I'll take it, actually. Get an extra $60 to assume SPY will be below 396 today. Just keep an eye on it. New options alerts. This is a day trade. Premium members. Just opened a new SPY call credit spread expiring 3/2 is today's date at 12 each, and assume it's going to be below 396. Right. Yeah. Sweet. Okay. So if we get any break of confirmation, say if we go above the 200 moving average, or if the dollar ends up coming back down some more, or if somehow the 10-year ends up managing its way back down to the low 4.0s, then we would have to get out of this position. Can I explain the difference between SPIX and SPY? Need a refresher. So SPX is a cash, what is it? It's a cash index. So that means that you can't get assigned early if the option goes in the money, whereas with SPY you can. SPX is also, trading for $3,940, whereas SPY is trading for $393. So there's a lot more leverage. For every $1 change, you'll get the delta change in the option. Whereas for SPY, if it's trading at 1/10 the price, you're going to get less leverage out of it. So it's cash settled was the word that I was looking for SPX. SPY, you could get assigned early. With SPX, you cannot get assigned early. That's the main difference between the two of them. SPX is a European style. That's what they call it. Option. Let's see. Might be a war for the 200 moving average if the bulls don't break it soon. It looks like they just broke it right now. So we might ought to exit our position. Luckily, I didn't go too heavy in it. All right, they're going for 18. So we could have got a lot more credit out of it if we had waited a tad longer. But looking at the dollar index, that one's still hanging low. 10 years down to 4.05. So I might as well just cut the losses as is at 0.2. Maybe get them out at 19 if we're lucky here. Hopefully we don't get too much of a push higher. There we go. Yeah, 19 each. So that one was like a 35 loss. Post it to the Discord. Tesla's back above 192. Wish he had bought more. Long term, I'm not sure about that. Closing options alert. Premium, just cut losses for the SPY 396. 397 call credit spread at 19 each. This one expires today. 3, 2. Moved above 200 MA for a 5-minute chart, and dollar yields pulling back. Best to just cut losses as is. All right. So let me log all the trades that we got this morning. Should be a decent profit that we made. Got 160 in profits from Tesla. I think it was 110 from IWM. This one would be a 35 loss, and I think I took a 50 loss on the other SPY trade that I had taken on. So let's check it. March sheet. Close this one today. Didn't put in the prices. Let's check IWM. Call credit. 190, 191. Got them out at 10 each. I opened them at 32. 32. 10. Close the Tesla one at 20. I opened 5 of these. The strike prices I chose were 190, 1 and 190. And then the SPY trade that I just lost on, SPY call credit. I'll just copy and paste this actually. Expiration date was today. Strike prices were 397, 396. 5 of them at 12 credit. Closed them at 19, so 35 loss. And then there's one more that I'm missing. Let's check new options alert. Okay. 396, 397. It's opened yesterday. 391, 392 put credit spread. Make sure I have everything else typed in here. 397, 398. Already got that one. Okay. Opened this yesterday, 3-1. Closed it today, 3-2. SPY put credit, which is a bullish neutral trade. Expiration was today, 3-2. And I ended up choosing 390, 391, I think. 391, 392 actually. 391, 392. 4 of them at 24. Credit, and then I closed those at, I want to say 36. Double check it. Closing. Come on now. That's annoying. Closing options alert. Looking for the 391, 392 put credit spread. All right, yeah, got those out at 36. Now SPY's pulling back to that 200 MA, so might look like an idiot for closing that out early. Looks like the dollar index is slightly higher than when we closed it. 10 years back to 40.7. So probably close that prematurely, but that's okay. I'll take my profits for today. So $75 profit today, 54 yesterday, totaling 129 so far for March. Hoping I can make it all the way green to March 17th for St. Patrick's Day, but let's see if we can keep the streak going. Let me check in on the other bearish positions that I have. What did I miss? How is it a loss on the call credit spread of 396, 397 if it's below the strike price? The reason why it was a loss is because I got in at 12 cents a piece and then I closed out at 19. So since I basically sold it for 12 and I bought it for 19, that'd be $7 of loss for each spread that I took on. Which I took on 5, so 35 loss. I'm thinking about closing out of this one. 391, 392 expiring for next week. I think we've got a decent drop for SPY already. If I can close these out at 40 each, wouldn't exactly be satisfied with the profits, but I think it's decent to get $30 out of this trade. I opened this, I feel like, a lot before we started trading down at these levels. Let's see. I opened these on February 24th. Let's see where SPY was trading February 24th. How you cover your losses on tax if it's more than 3,000. I think you can only write off 3,000 and losses. I don't do my own taxes, so I wouldn't really be helpful for that. But I opened this on 224 when SPY was trading at around 394, 395. I guess it's trading around the same price at 393 and high change 393.90. Still well below the 200 moving average for the hourly chart, but slightly above it for the 2-day 5-minute. So let's check. Yeah, these are going for 37 now. I opened them at 35, so meh. Maybe we can just wait till tomorrow with the services PMI. See if that will be another leg lower for SPY. We might see 391, 392 by tomorrow, I would guess. If that services PMI comes in higher than expectations, again, that leads to more inflation fears, which leads to interest rates going up. But with the interest rate, with the 10-year at 40.7, I'm not sure if we'll really go too much higher. I feel like that's already pricing in a high services PMI, so we might actually take the opposite trade. And assume SPY might recover a little bit tomorrow. Probably wouldn't want to open it yet since SPY is currently trading at 393.75. I would rather try to open it if SPY is closer to like 393, maybe 392.50 or so. But really depends on if we can hold that 200 MA or not. And it depends on RSI. If we continue to be bullish, then we're probably just going to keep pushing up to that 395.25 mark. Can I explain the ISM services PMI? So what ISM services PMI is, so ISM is the company or the agency that does it, that does the report. And then services is, the services economy, which we know is doing very well right now. So services is, not goods, but going out to restaurants or going out to, what else would it be? I mean, it's kind of hard to really define services. Like, for example, services could be, like App Store for Apple, or could be electronic services. It's really kind of wide array of things, but it's basically things that are not goods, right? So goods are just physical goods, such as, food, MacBooks, things like that, which we're starting to see deflation or disinflation in goods, but we're not seeing the same disinflation or the reduced inflation in services. So then you have services PMI, which is the Purchasing Managers Index. So this is the purchasing managers of the services industry. And if the purchasing managers are expecting their economy to be doing well, then you'll get a rating above 50. If they expect the services economy to be contracting, then it would be below 50. And if it comes in higher than expectations, that means that there's more expected services inflation to come. If you look at, this was a while ago that Liz Ann Saunders tweeted this. I hope that I can find it. But services inflation was something along the lines of 7% for the latest CPI report. I'm hoping that I can find where it is. It's probably pretty far down here, but if I can find it, that'd be great. Services. Oh, god dang it. I think I wrote it down on my notes the other day, so I'll just pull that up instead. The other week, I should say. So if we go to, I think it was a few weeks ago, maybe the 12th, recap. Okay, disinflation, new transitory. Here we go. Nope, that's not the right. God dang it. And let's see if we can find it in the upcoming macro. CPI, okay. So it's the next week, 218 recap. So this is the chart that I was looking at right here, where it's showing that goods inflation was reduced down to 1.4% year over year, whereas services inflation, excluding energy, was up to 7.2%. So we're seeing a divergence between services inflation and goods inflation or commodities inflation. So if services inflation proves to, be sticky and continue to go up or remain at the high levels that it is, considering that more and more of our economy is going towards services, then that would be bad for our economy if people have to pay higher prices for those services. So the Fed wants to reduce services inflation, which is something that they've mentioned at the last few speeches. Fed Kashkar yesterday, Powell was speaking on it at his interview with, I forget what the name was, but basically the Fed wants to get rid of the services inflation that we're experiencing. So if they're able to, the only way that they can do that is by continuing to increase interest rates just the same way that they're getting rid of the rest of inflation. So if services inflation comes in higher than expectations, if services PMI comes in higher than expectations, that means more services inflation to come, which means higher interest rates to come with that, basically. And if you look at the FOMC watch tool, this will give you a good idea of where interest rates are headed. Current estimate is 32% likelihood of a 50 basis point. This is actually up from 30% this morning, so another 2% climb for the 50 basis point rate hike. And if you're going out to July, which I think is expected to be the peak, we're expected to go to 5.5 to 5.75% interest rates at the peak for our interest rates, and it's expected to stay that high for a few months until December. That's when the first rate hike possibly is anticipated. I know that Goldman Sachs was saying that they're probably not going to pivot until March of next year, and I think JP Morgan, if I remember correctly, was saying that they expect the interest rates to go higher, maybe even as high as 6%. I think that there's a good chance that we'll probably need to go 5.75 to 6% for interest rates, and I think that's probably going to be outlined at the next meeting. So everybody's talking about 25 basis points or 50 basis points at the next meeting, right? But the big story for the March meeting is going to be the summary of economic projections, which is the dot plot where the Fed members expect interest rates to go, where they expect GDP to go, where they expect inflation to go, right? So if they're expected inflation to stay higher, then they're going to have to raise the rates. So we could be seeing that 5.75 to 6% estimate to send interest rates up and cool off the economy. It doesn't mean that the Fed actually has to do that 5.75 to 6%, though. They can say whatever they want. They could say, oh, we're going to 9% interest rates and then not ever do it just to scare the shit out of the market, raise interest rates higher, and bring down the stock market and pour more money into the bond market. That would reduce the amount of liquidity in the system, which is exactly what they want, right? They want to reduce the liquidity in our system that they pumped into the market over the last couple of years. That way they can try to reduce inflation. So the higher the estimate that we get for the summary of economic projections, the worse off the stock market is going to be. The last two times that we got the summary of economic projections, back in December and back in September of last year, SPY ended up falling by 3%. So, if SPY trades flat from where it is right now, very unlikely that it would trade flat for 2-3 weeks until the Fed meeting. But say if it does end up trading flat from 390, we'll say 395, and it falls by 3%, SPY would go all the way down to $383, which almost aligns with the the Fibonacci level 380 that comes from the COVID lows to the bull market highs. So that would be a pretty significant trigger to the downside if the Fed goes with, say, 5.75 to 6% interest rates, or if they go even as high as 6.0 to 6.25. Personally, I think that the Fed is going to need to go above 6%, but my opinion doesn't mean shit. I'm not a Fed member. I don't get to control where interest rates are going. I just know that inflation is continuing to persist, even with going from 0% interest rates to 4.5, 4.75% right now. So they're going to have to continue to raise interest rates in the face of inflation, which puts more pressure on equities, more pressure on the odds of a recession. I personally wish that they would just get it over with and jack interest rates up immediately by like 100 basis points and get us to 6% immediately, instead of doing the slow burn of 25, 25, 25, and so on. That would be better off. That way we could restart the growth cycle, but we have a very incompetent Fed led by Jerome Powell, who said that we're in the process of disinflation when we literally never had disinflation. Month-over-month readings never went down. After the revisions that we saw for the December CPI, we never saw a lower month-over-month reading. So we do not have disinflation. But that's what the Fed wants to preach you. They want to preach you the soft landing. I'd say fat chance of it. Anyway, enough on my tangent. SPY currently trading at 393, back below the 50 or 200 moving average. And let's see. Dixie is back up above 105. The 10-year is at 40.77, so that's almost at a new high. I want to check in on the 2-year because that one's getting close to the 5 mark. Let's see. 2-year yield. .93 is what we're at right now. So if this goes above 5, the problem whenever interest rates are going up the way that they are is this makes investing into bonds and fixed income that much more attractive. So if you're seeing 5% on the 2-year yield or like 5.1, 5.2 for the 1 year yield. Let's see. 1 year treasury. Like, why wouldn't you want to park your money into bonds that are paying you 5.1%? If you have like mass liquidity, like if you have, say, $100,000 to put into bonds and you're getting 5% back, 5.1% back, you're getting $5,100 in payments over the next year, which breaks down to divided by 12, not multiplied by 12, $425 a month, which, that's not too bad. 5% fixed income is pretty damn good. The dollar index and SPY is taking a dump. Yeah, exactly what's going on. Basically, whenever the dollar goes up, SPY comes down, and then inverse, whenever the dollar goes down, SPY goes up. So that's why you saw the rise in SPY whenever we dipped down to 104.90. But now we're still trading at the highs from the last couple of days. So as long as this continues to perpetuate up, if we break that 105.36 mark, we could have some trouble for equities in the near future. Hi, Julio. Any opinion on what could break the market? I was thinking something to do with consumer defaults, debts. I think that the consumer still has, well, it depends on what consumers you're looking at. If you're looking at low-income consumers, then yes, I would say that they are on the risk of default just because putting food on the table, paying for rent, and all the necessities have become too expensive. But if you're looking at your high-income earners, say $100,000 or more for household income, I think that they still have plenty of savings. The reason why I think that is because of the huge interest in buying homes in January whenever interest rates dropped by 1% for the 30-year mortgage, down from 7% to 6%. You saw an 8% increase in the number of home sales month over month on a 1% drop in interest rates. So that still shows that the high-income consumer still has a shit ton of ammo left over. So, on one side of the spectrum, the low-income people, they don't have as much money to, be buying homes. That's pretty obvious. But then the people that were on the higher end of the spectrum over the last few years that have been making $100,000, $150,000, $200,000, they still have ample savings. So it's kind of a mixed bag. And until you start getting probably more layoffs in the white-collar sector, which we've seen quite a bit of with the tech sector, but hasn't really affected much considering they have still ample savings. But until we start seeing more layoffs in white-collar workers and people that make $100,000 or more, we're probably not going to get a break in the system. We should just cancel all credit cards. Yeah, cancel student loan, cancel credit card payments, just cancel everything. Just let the U.S. default on its debt. Everything will be fine. That's another thing that could really spark some fears in the market if the U.S. defaults on its debt. The U.S., they always play the shenanigans, the political shenanigans of, oh, we're not going to raise the debt, we're not going to raise the debt limit, and then they end up doing it anyway because of the if they didn't raise it, then we would be on the risk of default, and probably the U.S. economy would be shit. Nobody would want to borrow from us anymore, which is where we get a lot of our income from offloading our debt to other countries like Japan, China, especially those two countries. So if we're not able to continue to lend out money, then we would be in some pretty major trouble. But that's the second thing that would kind of set us off possibly, on top of the high-end consumers starting to lose their buying power. revoke all credit cards. Yeah, that would definitely be pretty triggering. I mean, if interest rates on credit cards are like 30%, that would be pretty nutty, I would say. I wouldn't be surprised if interest rates do go to 30% or above for interest or for credit cards, but we haven't seen that kind of interest rates on credit cards in a very long time. I think the most I ever got on a credit card, and this was back in like 2016, whenever I was trying to build my credit when I was young. I think it was like 26% on a credit card. I think my credit score was like 650. I was brand new to the credit system, so like predatory lending and stuff like that. But yeah, let's see. All right, this put debit spread for SPY, it's basically on the edge. Dollar ended up moving back down, so we're not really seeing any definitive moves right now. 104.97 when we were trading at 105.15 this morning. So until we get a definitive move out of the dollar, I don't think that the markets are going to move much of anywhere. And it's trading at 50 RSI, so it's basically neutral today. I wouldn't be surprised if we just burn time for the dollar and trade probably between like 104.70 and that high of 105.15. Not going to break the new 20-day high or monthly high, but probably not going to go back to yesterday's levels in my best guess. So we might just end up burning time with the dollar, burning time for SPY. SPY might go a little bit higher if the dollar trades flat, but I can't imagine too much higher from here at 394 right now. Congress always raises the debt limit before they go on vacation. Yeah, they usually do. They usually raise it in December, but they didn't this year because the new Senate leader has been a little bit confrontational with Biden. And I think if the GOP decides to let the U.S. default, I don't think that the blame is going to be on Biden. I think that it's going to be on the GOP. So I think it's a bad look for the Republicans if they do let the U.S. default. But at the same time, like if we just keep spending rampant, that's also not a good look. Like if we have a $30 trillion deficit, or not deficit, if we have a $30 trillion in debt, and that just keeps perpetuating up, that's just going to perpetuate inflation. The more government spending that we have, the more inflation that we get. So basically, the government elites pass down their spending to us spending more on regular everyday goods. Annoying, but that is what it is. Welcome to the Western world and credit. I wonder what we're going to look like when we have to start paying back our student loans. It's been 3 years and I haven't made a payment. Yeah, that could be pretty rough. I mean, how many people have student loans is the question. How many payments have been missed? I think what would really be shitty is if they reversed it the last 3 years and just made everybody pay all of what they missed. That would be a real kick in the ass for student loans. They can never default when they allow printing, unlike other countries when they have to print, which is backed by gold, double standard. Yeah, that's true. But at the same time, if you just continue to print money, that's the death of fiat, right? Then the dollar loses all of its value. And if inflation is at 5%, if it sticks at 5% for the next 20 years, then the dollar becomes valueless. The dollar has no value, which is another way that they could get rid of the debt that they have, is just continuing to keep inflation high, which would mean that the $30 trillion that they racked up in debt would mean nothing in 20 years if inflation stayed at 5%. But yeah. Anyway, I think that's all I got for y'all today. I already made all the trades that I wanted to. 10 years still hanging high. The dollar is kind of wavering, so I don't think we're going to get much movement today in either direction. And my best guess, probably still going to be negative just because of the increase in the 10-year yield. But if the dollar does end up making its way back down, that would be bullish for the market. That has an inverse effect. So that's all the trading I got for y'all today, and I will catch y'all tomorrow, Friday, at 9:30 in the morning. See you, everybody.